Hello, hello, everyone. Happy 2024. Thank you for joining our Unsalted AMA. I'm going to go ahead and kick it off to our co-host, Hunter Albright and Shawn Owen. Thanks, guys.
Thank you, Kelly. Great to be here, everybody. Happy New Year. As Kelly said, we are excited to kick off the new year with a continuation of the Unsalted AMA and our continued discussion around the Celsius refinancing, as well as other interesting topics for the group. Shawn, how are you doing today?
Happy 2024, everybody. Looking forward to making this year a good one. Thanks for being here.
And our other normal collaborator in crime, Justin, is in the space but is under the weather. So Shawn and I are going to voice his sentiment and thoughts as we go through it, but he'll be chiming in via the chat as well. But want to cover off a couple of topics, just give everybody an overview of what we're going to talk about today. Again, as always, if you have anything that you want to talk about or questions you want to ask, please raise your hand and we'll get you invited up. We're going to go, Shawn and I are going to walk through what we understand are the elements coming out of the judge's approval of the plan at the end of December, what that we understand that to mean from a timeline perspective, and how we are looking at it operationally to best assist everybody that wants to refinance their Celsius loan with SALT. We'll talk through the sort of toggle. We have a calculator that can help provide some additional clarity if people are interested, as well as go through the effective date and the steps that we anticipate will happen both before and after the effective date. And then lastly, we will do want to touch on a lend investment opportunity. We have a new offering that we announced towards the end of last year that we'll cover off. And then outside of those topics, we'll jump into any other questions that the group here today wants to talk through. Shawn, is there anything you want to add to that? And otherwise, we can start to jump in.
No, it's a good agenda. I think the other things are open for as long as we have time. If anybody gets to them, once we get through these topics, we can always jump through and talk about the general market and any other product related salt topics. Those are open season 2.
Fantastic. Why don't we start with, I guess, the facts as we know them, and would love if there's different points of view or different questions on this, then please speak up and we will talk them through. As I mentioned, the judge, and I think we're all aware, the judge approved the plan at the end of December. What this means for borrowers is that we are, one, expecting an effective date towards the end of January. And based on this effective date, we will start funding loans on that date or as quickly thereafter as possible. And so we'll go through a few steps, but we are looking for everybody that is interested in refinancing to complete their loan request with SALT by January 15th. And then we will have plenty of time together to be prepared to be able to execute those loans as quickly as possible after the effective date. Based on the communication so far from the court, we understand that, one, there is no toggle, and we're working off of the assumption that everybody will be getting 100% back, 100% crypto back on your paid off principal, and then roughly 68% of your crypto on the excess collateral. That does change based on the price of either ETH or Bitcoin at the effective date. And the team has developed a calculator to help provide clarity on this and for you to start to understand what you can expect to get back. If you were interested in that calculator, please email sales@saltlending.com and Justin and the team will respond back with the tool that you can then play around with and ask any questions. Shawn, let me pause there. Have you anything you want to add, or are there any other points that have come up in your conversations with the community?
There's always questions around the final crypto distribution price, an amount of, I should say, the price of what Bitcoin will be and the amount. Those are the last variables that none of us know, but that communication should be coming directly from Celsius. We can flag any questions directly to Celsius if it helps, but they also have support that is remaining open for the time being until they finally wind down everything. So if it's a Celsius specific question, we'll do our best to give you the answer. We may just redirect it directly to Celsius. And in our terms, if you don't see exactly what you're looking for in the loan application process, just make sure to speak to loan support about whether it be interest payments, time duration, you name it. Some of the specifics just can't be standardized across all applications until you get your specific paperwork, which is why it's so important to get an early head start if there are unique circumstances or situations that we need to address for you. That'll just come out in your final loan agreement. But other than that, nothing to add.
Shawn, I know it, just anticipating it will come up, and we've talked about it before. Do you want to just give everybody an overview of California before we jump into a little bit more of the logistics of what we expect to happen before and after the effective date?
Yeah, in short, we are in communication with California. If you're a California resident, we're wrapping things up with them rapidly and assume to or plan to be servicing California shortly.
Yeah, and just to add to what Shawn is saying, we've had really positive conversations in the final stages of wrapping everything up, and so really looking forward to getting that resolved, but fully expect to be able to assist and service loans within California, both for Celsius and then beyond that. And as we go forward, if there's any other questions, happy to address them both on jurisdictions, California, and otherwise. But let me shift gears now a little bit, Shawn. As we were talking through from a timeline perspective, we mentioned that our expectations based on the court documents as well as conversations with the creditor, with the debtor, is that we expect the effective date to be towards the end of January. We still are expecting the debtor to communicate to all of the creditors that to solicit your request for who you would like to go with from a refinancing perspective. And they will be requesting some permissions to allow them to share information with us so that we can help facilitate the refinancing and the settlement of the outstanding loans and the receipt of the crypto. So, one, be on the lookout for that. We will communicate when you should be receiving that based on the information that we get from the debtor as we go forward. Again, we would expect that to be at least 5 days prior to the effective date. So, sometime towards the middle to the sort of third week of January. Outside of that, we are going to be prepared to fund loans starting on the effective date and as quickly thereafter, so everybody can get settled as close to the effective date as possible. We are working with the debtor to do things in tranches to help accelerate and make that easier for everybody operationally. And if you are interested in the loan request or want more information, please go to saltlending.com/Celsius-refinance-solution. There's a landing page there that has a form. And if you complete that form, the sales team, Justin and the team, will get more information to you and talk you and help communicate with you the steps that you will need to walk through, both to get more information as well as to be able to get your loan request in. One thing to note is that everybody does have the option of 3 different types of loans. We are, very pleased to be able to provide 1, principal and interest, 2, interest only, and then as we announced towards the end of last year, there is an accrued interest option as well. As you were going through the process, please indicate which of the loan types you are most interested in, and the team will help make sure that your application and your request is submitted accordingly. Shawn, as you have been thinking about and looking towards the process, are there any other key elements just in terms of the offering or the process that people have asked you about?
It usually comes down to just questions around what the status is. And we touch on this every time we talk. I think it's a good, healthy reminder every chance we get. So if this is old to you, I apologize. I'm broken record. But the steps are get a SALT account if you don't already have one. If you do, either way, then apply for a loan that would account for paying off your total principal amount with Celsius. Whether you already have a loan or not is not an issue. We can refinance these later on if needed. Otherwise, it can be a separate application if you already have one. As soon as you get the response back through the process from loan ops or loan operations, the sales can help with this as well. That's where you'll need to read all of the disclosure terms and conditions and statements that are related to the actual loan agreement. Make sure that's accurate. The final pieces of this will be putting in the addresses for payoff and the final amounts once Celsius makes it known. And at which point we will be coordinating the closing schedules, which was what Hunter mentioned, on or after the effective date as soon as we can. And those will be first come, first serve, and from smallest to largest, just in a logical sequence that we have defined. And we'll be coordinating those in a tri-party relationship with you, the borrower, Celsius, the debtor, and us, the refinancer. And there's really nothing more to that other than feel free to always reach out to us if there are questions. It's really important that we are giving you all the information you need continuously until the final loan agreement that would have signatures on it and whitelisted addresses is formal and final. Until then, there's always room to make sure that we've got it right. No questions or bad questions.
That's great. Shawn, thanks for that. AK474, thanks for being here again. Feel free to ask your question.
Thanks, guys. My question is, now that we're getting closer, hopefully, a little more into the specifics of what to expect. I had a bit only loan with Celsius. Do you all expect that will then be just given to me as all Bitcoin, or do I need to do one of these special emails to them to request that they did not mix it up?
I would reach out to them to get clarity on that just to be safe, because we can only go off of what the final liquid crypto distribution is determined. As far as the assumption, I would just remove that assumption by asking them directly. We'll note that to ask and get clarity on that as well, but it's probably wise to just make sure that you get that information from Celsius.
All right. And then just a follow-up on that. Um, once the uh, refi closes and they transfer assets to you all, it will be both the refi, whatever that amount purchases, whatever my entitled distribution is from my leftover collateral. And then I also had just a regular earn account with a little bit more coin in that. Will that be transferring to you also, or will that have to go through like a different distribution process?
What I understand is that it will all be part of one liquid crypto distribution,
Okay.
and then it would be up to you. For example, if it was enough that you wanted to have all of it to be there as collateral in the new loan with Salt, or if you wanted some of that to be withheld. We allow for reverse margin calls, which means at any point in time, if you had more collateral than you would like on the platform, you can put a request in and you can withdraw that out. We've had people here that are on the space that have gone through that process that could speak to that. So it may be simpler to just have it all go one place. Of course, we'd advocate for that, but whatever is best for you should be up to you at any point in time, whether
Yeah.
it's from day one or after.
Yeah, no, I would prefer it just to all get transferred. Just like you say, just simpler, easier, less things to go wrong, less things for me to screw up. And yeah, maybe I can put it to work with you guys. All right, that's my questions. Thank you.
Yeah, great questions. Thank you.
Yeah, thank you, AK. Shawn, do you want to just on the back of what AK was asking, share a little bit more about our lend investment opportunity so that people frame that? Because I think he brought up a really great point about if you do have additional collateral that is due to come back to you from an earn account with Celsius, what the options are with Salt.
You bet. So first and foremost, saltlending.com. Salt is a lending platform. We really only have one business, and it's a very straightforward one. We help facilitate lending against digital cryptocurrency in the form of Bitcoin and a few others, but mostly Bitcoin. The other side of the equation from when you're the borrower is lenders and lending capital, and something that we've always maintained with only accredited investors and only in the US. We're talking about today, and this is not investment advice and this is not a general solicitation. This is nothing more than explaining how the lending business works and making it simpler for people to understand if they wanted to participate as a lender, how they could go about that. We've created a landing page on the homepage that says lend, and you'll see either the word earn come up or the word lend come up or the word invest come up. There's an accredited investor template that goes through the process of validating where you live and who you are and what your interest is. All of that to be said, we always only interact with people who have an officially verified account with Salt. But there's a distinct clarification and or a way of tagging the accounts that you can have an account ID, a loan ID, user ID. We've added in the ability to track an investment ID, which would be verifying that you're an investor and maintaining records that keep you verified as an investor if you want to be. And that will be different in different jurisdictions in the world. This is speaking predominantly from where we're domiciled, which is in the US. And that would be the accreditation verification process, which will be different other places. But in that, then there's the ability to lend capital. The earning word or earn comes from earnings, which you would record as interest income. Once you got your tax statements, that would be investment earnings or income. And that is used to lend to borrowers. So all of that to be said, that's participation in the same model that you all heard about with Celsius and participated in, except for that money is not going any other place. It is only used to fund loans. And that's the two sides of the coin, or that are the two elements that exist in a lending platform. The more deposits you have in people looking for loans without having more capital, the higher the interest rates go. The more people you have looking to invest dollars without people wanting to borrow, the lower the interest rates go. And it becomes a very dynamic market that helps establish the rates. A lot of those rates are outside of our control because we're really just a smaller platform that has a market dynamic, but we're still subject to the same market conditions. We're always in the market looking for additional borrowers and lenders. And as we grow, we're anticipating to make this a much simpler and more integrated process for a whole host of reasons. But that's basically the gist of it, of what we're speaking about at a high level.
Shawn, thank you for that. And if anybody has any questions on that, we'll be happy to take those up. Aaron, welcome up and please ask your question.
Yeah, great. Thank you. A couple questions. One is for California resident loans, do they need to do anything with regard to Celsius before any decisions are made? And the other question, I apologize if this is a very basic one, but did I hear correctly that if we had a loan with SALT and we had excess collateral, as everyone does in order to maintain an LTV, that we're receiving only a portion of it back?
Yeah, let's break that into two. To clarify the last question you just asked, are you saying that if you had an extra amount of collateral, can you get some of that back from the Celsius side, or are you speaking as somebody who already has a SALT account with extra collateral?
I'm just speaking as someone that has extra collateral on SALT.
Okay, so the process to move and pay off the loan at Celsius will then increase your collateral balance and increase your loan balance. It will most likely be a new loan document specific to Celsius, which then can be merged or managed. We typically like to get people to have one loan agreement instead of multiple, but sometimes there are use cases where people need multiple loan documents for different various of reasons. That would be preferences that you're setting Ultimately, the collateral is your collateral. We only need the excess collateral to maintain health, to protect lenders. And the lenders are fine as long as they're getting their earnings back. If you have any extra collateral you want to pull off the platform at any point in time, you can do such. That's called a reverse margin. A margin would be when we say, hey, you need to add more collateral. A reverse margin would be when you say, hey, I need some of my collateral back. And there are no restrictions on that.
You used a number 67% or so, 60 something percent back. What is that in reference to?
That Aaron,
Hunter,
that
you
is
want to
in
speak to that?
reference. Oh, go ahead, John.
Oh, I was just going to give that one to you.
Oh, I was going to say, yeah, Aaron, that's in reference to the percent of your excess collateral at Celsius that we are expecting you to get back based on current market rates.
But that would not apply to me because I am SALT.
That is correct. We were
Correct?
talking about that earlier conversation was what creditors to Celsius would be expecting to get back at the settlement.
Okay, and I guess I'm just a little confused because it seems, again, I would be in kindergarten, just to be full disclosure with all of this, because my world is not in finance. So if I don't have any duties or to-dos with Celsius, given this restructuring or whatever it is that's going on, if I originated and have only dealt with SALT, is that correct?
That is correct. So
That's correct. Yes. Sorry, go ahead.
Yeah, no, that's right, Aaron. We were talking through the numbers we had talked about previously was for those people that are looking to refinance their Celsius loans. And as part of that
Okay,
process, there'll be some return of crypto collateral as well as principal back based on what the courts have ruled. And so that's what we were outlining earlier.
got it. So there isn't any risk of people that had loans with SALT to receive only a portion of their collateral back. SALT loans will receive all of their collateral back.
That is correct.
That is 100%. Yeah. All of this conversation really is geared towards Celsius specific. So we have a program for people who are victims of Celsius in order to help them pay off of their loans out of the bankruptcy process if they would like to maintain a position where their collateral is in a loan is collateral. Otherwise, they would be netting out and being liquidated at a rate that a lot of people do not want to have happen. So this, although we can talk about general SALT topics for sure, this has really been an ongoing campaign for us to make sure we're educating and helping out people who are in that camp where they had Celsius loans that need to be dealt with, that we're helping solve problems around. So thank you for bringing that up. We take it probably for granted. We'll make sure that we're clarifying this space when we're talking about specific customers that are coming over from Celsius and ones that are already with SALT.
Okay, thank you.
Thanks, Aaron, for coming up. Dude, thanks for raising your hand. First of all, a shout out. I love the handle. I'm sure it was quite the challenge to get that originally, but thanks for coming up and would love to have you ask your question.
Yeah, thank you very much, Hunter. Can you hear me okay?
Yeah, you're good.
Okay. So I have 2 loans on Celsius totaling about 200,000, and the collateral for that is all Bitcoin. I apologize because I've really not been paying much attention to the developments on Celsius lately, but my understanding is I really don't have to do anything, and I'll get a portion of my collateral back possibly. Could you guys explain to me what would be my incentive to do a loan to do a loan from you to pay back my loan with them? What would be the upside?
Yeah, I can start and then Hunter, you can add on if you'd like. You are correct. You do not have to do anything outside of whatever paperwork has been sent to you and required related to Celsius. We are not officially affiliated with Celsius in any way other than in tri-party agreements that would be for the purpose of paying off loans at Celsius And your question specific, although we have been involved from the beginning in looking at different ways we could help out with creditors and had made official bids and had proposed different solutions and ideas that we thought would be beneficial for creditors. Right now, focusing in on the question of why would somebody do that? The reason that somebody would want to pay off their loan obligation, the retail borrower obligation at Celsius, for the purpose of getting their collateral back outside of doing nothing. It's a question of whether or not you want the full amount of your crypto back that was the principal amount, or if you want to hold on to the dollars that you already borrowed. For people who say, let's use your example, there's $200,000 in outstanding principal, was the way I was interpreting it. We could just use that as the example. Then that would be $200,000 of Bitcoin, or that would be $200,000 in dollars that you already received. For people who have the means that can pay off the loan with the principal, meaning pay it back, close it out, then they get that plus the additional recovery, the over collateralized amount in liquid crypto. So they will get more crypto back. For somebody who doesn't have the means or doesn't want to have a loan, then they will not do anything, and they will assume that they are only getting back whatever was the difference, which would be an offset or a net out amount, depending on which terminology you use. So for the main advantage that people came to us looking for solutions around was, I don't want a liquidation event. I don't want to sell off my collateral. I wanted to keep the collateral. That's why I was at Celsius. I would like the full amount of the collateral back, and I would like to maintain it in the form of a loan structure. That's really the audience that we're speaking to, is where that is of a value to people. For anybody else that's not interested in that, this conversation is probably not for them. Does that help on that question?
It does, Shawn, and I'm not asking you to get into the specifics of the Celsius, the final approved settlement or whatever. But are you saying that? So, like in my case, I have 14.5 Bitcoins that are tied up in collateral. Are you saying that if I pay off my loan, that all of that would come back to me?
That's correct. There'll be so say you had the total amount of dollars that would be repaid back. That will be the additional amount of Bitcoin that you would get back. Otherwise, they imagine a liquidation of a loan. So if you do nothing, they just treat it like a liquidation. They just net you out and send you the difference. If you pay off the loan, this was heavily negotiated by a lot of people who did a lot of work on behalf of the borrower group to get the ability to avoid that. But the creditor and the court said, we'll honor a process where you can avoid that liquidation if you pay the principal back of the loan.
So would it liquidate at the price that the date of the effective date of this, which was in June of 22, or when are we talking about as far as a liquidation price for the Bitcoin?
Right, good question. So that this is where it gets confusing, because the final distribution amount hasn't been determined for everybody because the effective date hasn't been secured yet. But you have the petition date, and that, I believe, is what price you get liquidated at. Let's confirm that, though.
That is correct.
So that was like 19,000 or something like that, like 19,000. You're saying you'd be liquidated at that price, the price from the bankruptcy declaration date, which was in June of 22?
Yeah, this is a Celsius specific question. So
Right.
just for everybody's clarification, we're going to give everybody the best info we can. What our role in this would be is we would be providing the capital to pay off loans for people who don't have that on their own or who want to use us for that. And we would be confirming the tri-party agreement with the debtor to where they will secure the address safely when we pay off that loan, that they will send the collateral to SALT for borrowers who have accounts. We don't have any input or say on any outstanding items. But basically, there's a calculation. We have a calculator that we've been sharing with people, and the final inputs to that are dependent on Celsius choosing the effective date. There's probably some other people on here that can articulate this even better than I can, so feel free to jump in if somebody wants to add. But basically, you would be liquidated at that price, and the difference would determine, hey, you already took the money. So that's their standpoint. If I'm on the earn side or if I'm the debtor, I'm going to say you already had the principal sent to you. So you already got that money, and then all of this happened. So your loan will be liquidated, and you either will or won't have any additional collateral left. If you do have additional collateral left, we'll send it to you in the final liquid crypto distribution chart. That number just increases if you pay the loan off, because you're basically buying back that collateral, or you're preventing the liquidation of that collateral, however you want to think about it. Let's see if anybody else has this answer. The precise answer or the precise question is related to what price is being used to determine the liquidation for the net out amount when a borrower gets liquidated if they do not pay off their loan obligation.
I understand it to be, it is that 19,800 approximate amount. Yeah.
That's my understanding as well. Just seeing if there's any other opposing views.
So just to follow up on that, what you're saying is, and again, and I apologize, Shawn, for asking you questions that are more related to the final settlement and Celsius, and I know you're just trying to create loans for people. So I'm asking you to step a little bit out of that, but you're saying that if someone were to pay off their loan in full, then the full amount of the collateral would be returned.
Yeah, minus there is a haircut amount from what happened through the bankruptcy process, but that I would think about that on the over collateralized amount. And don't apologize for it. It's a great question. I think this is at the heart of things, so it's a good question to ask.
Yeah, I'm just trying to determine whether or not I wanted to pursue paying it off or just leave it be. And it's a tough one because I don't really know all the details.
Hello, Shawn. Let me intervene right now because this is the key point he's asking. If you repay your obligation, then your collateral turn into an earned claim. So then you will get back whatever the recovery rate is, but you won't get back your collateral in full. In the example the gentleman gave, if he has 14 Bitcoin or whatever the amount of Bitcoin, the redistribution of Celsius bankruptcy will turn your Bitcoin into a 50% BTC and ETH mix. So he won't get back the 14 Bitcoin. He may get back 60% at the effective date dollar pricing, and also he must consider that he will get some ETH and some BTC mix and not only BTC. So I just want to clarify, if you pay off your loan, correct me if I'm wrong, but you don't get back your collateral in full. Thank you.
Yeah, nobody's getting their original collateral back in full. So that's the starting point. There is no ability for anybody to get the original amount they had on the Celsius platform back. Hence all of the last year of debate and fighting and everything else. What the question becomes is, and thank you for pointing this out, the question becomes, what's the difference between if I let them liquidate me and just send me back what's left, or if I pay off the loan amount and they send me that amount plus what's left back? You have
Exactly, Shawn.
two components.
That's right.
Yep.
Tony is going to intervene on the liquidation. Please let him speak.
Hey, Tony.
Hey, Tony. Hey. Thanks for coming up.
Hey, guys. How's it going?
Very good. Happy New Year.
Happy New Year. Happy New Year. Just wanted to, if I could simplify it a little bit, just so people don't get confused. The actual collateral is pretty much gone, right? There is no more collateral. All we have is the dollarized bankruptcy claims. The mechanism here pretty much works nearly identically the same, whether it's a repayment, a set-off, or a refinance. Basically, they will subtract your principal amount from the collateral claim, which is dollarized as of the petition date, where one Bitcoin was $19,881, right? If you elect a set off, they will subtract that amount, the principal owed by the collateral claim, and then you will get a haircut after that, and then you will be entitled to whatever percentage distribution back, right? If you elect to pay it off yourself, or if you choose to refinance with SALT or anybody else really, what they'll do is they will subtract your principal amount from your claim and give you that same exact percentage. However, on top of that, the principal owed, SALT in this case, or you, if you choose to pay it off yourself, will be putting up the cash to pay the principal, and then they will get an identical amount back in crypto, in the collateral, if it's Bitcoin or ETH. If it's an altcoin, unfortunately, they're not allowed to distribute anything other than Bitcoin and ETH. So it will be returned in Bitcoin and ETH. So there will be a taxable event there if your collateral was originally an altcoin. But if it was Bitcoin or if it was ETH, whether it's the lender or yourself, you pay back the principal and you get an identical amount back. So theoretically, you're getting back more of your coins in the refinance and the repayment scenario. But in the set-off scenario, you're keeping the principal amount versus paying it back. So it's more or less the same.
Tony, thank you so much for that. I'm always a little hesitant to want to come off in any kind of sales pitchy way, even though we're sales pitchy because we're a business. Would you mind giving the perspective of why a borrower, because I think what the dude is really asking, which is a good question for a lot of people, is like, well, why should I care? Why would I want to do that? How is this not just another business making a sales pitch? What's the value proposition for a borrower? Why, more specifically, why would a borrower want to pay off the loan obligation? I think that's at the heart of it.
Yeah, sure. First, let me just the sales pitch part of it. SALT is taking on incredible risk here, right? They're asked to pay an amount of money that we don't know yet to receive an amount of collateral that we don't know yet. So just from a risk management standpoint, I'm sure whoever is handling that is probably just tearing their hair out. Every day the price goes up, that's a good thing, and every day the price goes down of Bitcoin, it's, oh shit, what are we getting into? A lot of people say, oh yeah, they're selling, they're doing this, they're doing that, but they're also taking on incredible risk to help us, right? Because if they're not willing to do it, the people that need to refinance, but for whatever reason, whether it's taxes or personal situation, whatever the case may be, and they're not able to, they're going to get hurt tremendously. So they're really helping us here. I just want to say thank you. I know it's a pain in the ass. I know this process is very difficult. I know dealing with a debtor is not exactly, let's say, easy, right? So they're going through a lot here. From the borrower standpoint, there's a few reasons why you would want to refinance. The biggest one, and maybe not the biggest, but the one that I hear more commonly, is just from a tax perspective. You don't want to take the loss. You want to continue the loan. And if you, for example, let's say you had a low cost basis on your collateral, it's not going to benefit you much. You're going to lose a ton of Bitcoin. You're not going to get the upside on Bitcoin or ETH or whatever, and you're going to get a tax hit. The other alternative is maybe I don't care about taxes. Maybe it affects me. Maybe it doesn't. Maybe I have a high cost basis, so it might benefit me in some way. But I'm a Bitcoiner. This is my scenario I'm specifically talking about here. I believe that the price of Bitcoin today versus the price in a year or 2 years or 3 years, whatever, is going to be substantially higher in the future. So what I can do is I can take my claim, right? The attorneys like to use the salad scenario. I could take this shit salad that they've given me and I can add some dressing to it pretty much. I can get more of my collateral back technically. I still have to pay the principal, right? But I can get more back at today's prices and then pay it back at tomorrow's prices where I think it's going to be substantially higher. Those are the two main reasons. Number one, save on taxes. Number two, you think Bitcoin's going to go up and you think financially buying that principal amount at today's prices and then paying it off at tomorrow's prices makes sense.
So Tony, and Shawn, is it okay if I ask Tony a question?
Absolutely. No, thank you, Tony. That was really well stated. I appreciate that.
That was great. Let's just say that you don't need a loan to pay it off. You have the funds. What would stop you from just taking the funds and going into the open market and buying Bitcoin with those funds at today's prices? And then you have exposure and you don't have to mess with all this.
Yeah, you could do that. There's nothing stopping you, right?
Okay.
Let's say you have let's do easy numbers. You have,
because my numbers that I gave earlier were real. It's $200,000 loan, 14.5 Bitcoin. I can just take the 200K, buy whatever that amount of Bitcoin is. Maybe it's, I don't know, 4 now.
4.5.
I get it. Right. And if I get anything back from the Celsius fiasco, that's just the cherry on top. Move on with my life.
Here, let's do real-time numbers. Let me open up my little calculator thing here. Here we go. You said 200,000?
Yeah.
All right, so 200,000. And how much Bitcoin you had as collateral?
14.5.
14.5. All right, it's easier if you do real world scenarios. That way it's more real to you. So
Right.
if you choose to refinance, of that 200K, let's say Salt is refinancing your loan. They're going to pay Celsius $200,000 on your behalf. And then 1-for-1 split, they will send Salt 4.5 Bitcoin for that principal amount. And then on the excess collateral, this part, it could be 100% wrong, but let's just go with it. At a distribution percentage of roughly 68%, which I think is accurate. Maybe it is, maybe it's not. I don't know. Let's just say it is. That's going to be another Bitcoin and a half. So to refinance your loan, you're going to get back something like 6 Bitcoin from Celsius. And by you, Salt is now going to have 6 Bitcoin backing your loan. And you're going to have a debt to them, which is 200K. And you're going to have 6 Bitcoin, a little bit over, in collateral, essentially, backing that loan.
How did you come up with the 1.5 Bitcoin, that overage part? What was the math on that?
So the math on that is the petition day value of your collateral.
Which is like 19.8.
Yeah. So the total amount plus the 5% is like 300K. So you subtract the 200K from there. So now the remaining all right there. So the remaining is 100,000.
So you took 14.5 multiplied by 19.8, 287,000. You subtracted 200, that left 87,000. Is that how you did that?
No. So the total amount came out to 302 with the 5%.
Oh, with the 5%, right? I forgot about that. Okay.
Yeah. So you subtract 200 from that, it's 100K left, 102, whatever. Let's say 100K. At today's prices, that's about a Bitcoin and a half. Well, I'm sorry. I applied the haircut, which I'm estimating to be, we're going to get back roughly 68%. It could be more, could be less. I don't really know. I'm just looking at what other people's projections are, and I'm just kind of going with it. It depends on the price of Bitcoin, but that's just a guesstimate. It's an educated guess based on other people's educated opinions.
I see.
The debtors haven't given us anything, so we're just left to our own devices. So let's assume that we're going to get to 68% as everyone is projecting. 68% of 102,000 is about 69K. And then at today's prices, I'm assuming 44K Bitcoin, that's about 1.5, 1.6 Bitcoin. So the 4.5 you had from the principal repayment, and then a 1.5 from the excess collateral, which is the collateral amount that is left after the principal is subtracted from it.
Okay, I see how you did that.
Yeah.
I appreciate that, Tony. I just followed you, so I might be hitting you up in the DMs. And I want to tell everybody on here that I've worked with Salt in the past, unrelated to this, and they did a great job. And I took a loan out and I paid it off. And I'm a believer in Salt. So I just want to put that out there because I got to drop off here in a minute. Thank you for allowing me to speak.
Let me just continue with this. Even if you drop off, it'll help everyone else too. Let's say you want to take that 200K. If you pay back Celsius, they will give you 200K worth of Bitcoin, which at today's prices is 4.5. And if Salt does it, then they'll give it to Salt to be your new collateral, right? So the difference is you either get about 1.5 that you will get yourself, and there's more to that, but let's just keep it simple for now. So you'll either get 1.5 or you'll get back 6 while still owing that 200K debt. So you can get 1.5 with no debt or 6 with the debt.
And Tony, just to jump on your analysis here, with the excess collateral, that's going to come back in a mix of ETH and Bitcoin, isn't it? Like if it's under 100K?
So here's the thing, right? If you pay it back because we got them to cave on it or whatever, they're going to do the structure in a tax efficient manner. Meaning if your Bitcoin, as long as they can, right? If your collateral was in Bitcoin, they will give it back to you in Bitcoin. But if you just set off, then they're not going to do that because there's a lot of work for them. And I don't think they're really in the giving mood, not with borrowers lately, at least. But so the problem is if you choose to set off, you will get back that in your scenario, 1.5-ish Bitcoin, but half of that amount will be in Bitcoin and half of it will be in ETH. So now you'll be getting less Bitcoin, but now you'll have a capital gain in ETH, assuming you had no ETH. So you'll have a higher loss in Bitcoin, but you'll also get a gain because you'll be given ETH back. Financially, it's pretty much the same, right? The difference is in taxes. I don't know if I explained that well. I feel like
you
I
did.
kind of
Yeah, Tony.
Thanks for clarifying that.
Tony, that was great. One follow-up
So
question just on the example that you'd given. If the creditor chose to allow the 200K just to be settled, that then is a taxable event, correct?
That's TBD. I'm talking to my accountant. I've been talking to Keith Suckno, who's a CPA as well. Use promo code Tony if you want to use his services. Just kidding. So technically, right, the only way it's a taxable, look at it like this. If a debt is forgiven or discharged, then the amount that was borrowed becomes a gain, right? So let's say I borrowed 100,000 from Celsius. I told them, go F yourself. I'm not paying you back. They're going to say, fine, nothing we can do. I'm going to discharge this debt. So now that 100K that I took as debt now becomes not income, but a gain for me. However, the way they're wording this is that the debt is forgiven or discharged. I disagree with that emphatically because they're subtracting it from my collateral. It's not discharged because the only way a debt can be discharged is if it is completely discharged. If I owe you money and you take something else from me to settle that debt, it's not discharged. I still paid you back.
you're paying it back with your collateral that they're already holding. It's not being
Yeah.
discharged. So is that something that you would have to discuss with your tax preparer?
You'd have to
Or is
talk
that
with you'd have to talk to your tax preparer, to your
Yeah.
CPA or whoever does it. The way they've worded it in the disclosure statements and the plan documents is that the debt is quote unquote forgiven or discharged. But that's not accurate.
Right? That's not accurate at all.
Yeah. I wish it was forgiven because then you would have a bigger claim, but that's not what they're doing at all.
No.
So the way I plan to do it, not tax advice, probably wrong. Hopefully I don't get audited. My debt will be paid. I haven't decided yet if I'm going to set off or refinance. Honestly, I flip-flop every single day. This bankruptcy process has been a disaster. Depends on how bitter I am any given day. But let's assume that I was going to set off. If I end up setting off, what I will do is, let's say I had, 10 Bitcoin as collateral. If I only get back 1 or 1.5, then whatever my cost basis is, the amount that is lost, that is how much I plan to write off. But again, not a CPA. I don't know if my CPA will agree with me. Hopefully he does. We have a meeting next week to talk about it. That's how I'm looking at it now. The plan documents, I don't know why they did this, but they're trying to screw us on that. But I disagree with their characterization of it.
Yeah, I don't think their characterization matters because they're not filing our taxes. So it doesn't matter what they say. I'm out property.
So it only
So
matters in one scenario, right? Let's say a creditor, somebody who's worth a ton of money, gets audited all the time, and because it's a giant amount of money, they're going to look into it, intensively. So as they start looking at it, they're going to go through all the plan documents. They're going to read that section and say, under this bankruptcy, all the borrowers that set off have a discharged debt. And now whoever else did the same thing, if they get audited or might trigger an audit, right? They're going to be looked at it from that same view. So it's down the road. Maybe it happens, maybe it doesn't. I don't know. But that's the problem.
But but my only point is that I know they're calling it that and that we might all then be cast into the same boat, but I don't think the IRS in their analysis will rest on, well, in the bankruptcy disclosure statement, they called it a discharge. I don't think that will be the sum total of their analysis. I think they'll actually break it down like you did and Dude did. No, you had property taken. It was a payback.
So
I'm going to do it exactly the way you did it. And
so
I've
I
studied tax law, so.
I agree with you. The problem is if you take 10 CPAs and you take 10 tax attorneys and just ask them the simplest question, they will all give you a different scenario or a different response. So, like, no one wants to hear you got to talk to your own CPA. It just depends on what your own CPA feels comfortable doing and how he wants to do it, or she.
And Shawn, I'm sorry, Shawn, I don't want to turn it into a tax space, but since this is probably one of the main reasons why people want to take a loan, it's good to hash it out. But Tony, what about the crime fraud exemption for taxes?
So, this is a little more complicated. So, we were defrauded out of our collateral, out of our money. There is the, what's it called? Forced conversion, I think. Damn, I can't think of the term now. But either way, so we had collateral, let's say it was Bitcoin, and we were forced to convert it into a shit salad, as I like to call it, of some Bitcoin, some equity, some liquid assets, some recovery tokens, some whatever. Technically, you would be writing off the loss of your asset, and then you would have a gain of whatever the new asset is. But under that exception, the new asset, the cost basis on it would just reset, and it's not like a taxable scenario. Again, I can't explain this in any clear of detail because I'm not sure I totally understand it myself. The only thing I can say is just talk to your attorney about it. So because Alex Mashinsky and because Daniel Leone are under investigation for fraud here, and because who was the other guy? Ronnie Cohen pleaded guilty, so technically there is a guilty plea on the books. I think we qualify for it. You just have to talk to your own, tax preparer about it.
Hey, Tony, the problem with the theft loss, and I think the legal term is a theft conversion, to apply that, the collateral must be rule your property. I think that's the bottom line.
Yeah, see, that's the thing. It's very complicated. I'm not entirely sure.
Just to counter that point, everybody except for Johan had no declaration on whether or not it was ours or not. That was one thing. One thing we got going in our favor was that was just left hanging out there.
Yeah, and that's why we took a lot of flack for that, but we didn't want that determination on the books, right? A little bit of ambiguity never hurt anybody.
Tony, thank you so much for coming up and sharing your understanding and your expertise around this with everybody.
Yeah, I'd just add one thing to that. So from SALT's perspective, what we've always historically seen when we've done refinances in other scenarios with other lenders, which we've done plenty of, without it being in a bankruptcy or with it in a bankruptcy, from our perspective, there's still just two transactions that happen. There's the payoff of the loan and there's the transfer of the collateral. And whatever happened while the collateral was not your property or wasn't on your books is somebody else's tax problem. In this event, because there is a haircut, there will be something that is a transaction outside of just the payoff of the loan. But in the traditional stance, somebody sends Bitcoin to a lender, they borrow capital, there's a transaction. Whatever the borrower does with that capital, the dollars, throughout the period of time until they pay it back, the lender has no interest in. And whatever the lender does within that time period, also the borrower doesn't have a say so of. They're not accountable for those transactions or taxable events. But when you pay it off, you get back your collateral. In this case, you're getting back most of your collateral if you pay off the loan, but not all of it. But the argument would always be, I just refinanced my home. I didn't have anything to do with the mortgage transfer and in between all of that. I just paid off the loan with Celsius, and the collateral that I got back is X. The collateral I put up is Y, and the difference is whatever the transaction is. It gets way more complicated with all the things that you all have had to deal with. But from
a high level, the way that we see it, there's still just going to be what you sent in and what came back out, and what you got when you borrowed and what you paid back. And that's not tax advice. That's just trying to frame this for people to understand, like, why would somebody want to continue that position? Because it changes the outcome of the numbers in a couple of significant ways.
Oh, so one of the other reasons is simplicity. If you choose to refinance, some people have to go with PayPal for their distributions. Some people have to go with Coinbase. It's not going well for the people that have tried already. If you refinance, you don't really have to worry about that stuff. You don't have to worry about the $10,000 a week max withdrawal from PayPal that is supposedly going to get worked out. Whatever amount of collateral you're entitled to receive back from the bankruptcy will just go to SALT, and then you're only dealing with SALT. On the earn side, like I said, it is what it is. Nothing we can do here. But at least from the borrower side, you can simplify your life. And you can close out your loan whenever you want. I'm not trying to shill anybody. I'm not trying to whatever. I'm just going over the details. If you choose to go this path and you're in it for a month, 2 months, a year, and you decide, I don't need this loan anymore, or I just pay it off, I don't want to worry about it, whatever the situation might be, then you can just close the loan. Problem solved.
Very good. I think this has been extremely helpful for answering the questions that have come up around taxes. I know it's complicated, but we're here for an open forum. If anybody wants to jump back in and take this further, or if there are other topics for us to talk about. As a reset for anybody that's maybe just joining, we're really focused on this space being in an event to help people understand a payoff process that we have for people who are part of Celsius. The loan payoff process is specific to borrowers, but there are elements that we're happy to talk about when it comes to the earned creditors as well. We also have earned there that we were talking about earlier. We're taking requests and talking about whatever needs to get answered just to make sure everybody has the best possible accurate information in this segment. And then if we run out of space there, we'll either end it or we'll open up the conversation to things more broadly.
Shawn, I think we have another question. Lawrence, do you want to ask your question, please?
Yeah, I apologize. I'm just joining and interested in understanding what it is that you're offering. So if I have a $100,000 loan with 9.4 Bitcoin and I go with SALT, it's based on a valuation of 188,000 for the time of the bankruptcy. What would be the interest payments that would be due to SALT? And from what I just heard a little bit of what Tony was saying, it sounds like you could exit in 1 month, 2 months, 3 months. Is that correct?
Yeah, the first question or the last question being the payoff of the loan and exit, or the pulling out of any additional collateral or upsizing. These loans are dynamic in the fact that there's always an ever-changing market condition, and people need either additional capital or want to pull additional collateral out over time. So both of those functions exist. There's a lot of flexibility. Our intention is to make them the most flexible option for anybody that wants to use this product, ultimately into more of a version of a line of credit and a purchasing power element for your savings account. But in the what are the interest rates part of that question, that depends on when we finally originate the loan or whenever the loan is refinanced, and that can change over time. Rates vary based off of supply and demand and things that are out of our control, both on how much liquid capital do we have to lend out versus what is the market dynamic. Rates are higher at the moment now, today, for example, as they were 90 days ago, and they'll probably be different in another 90 days. So we always rely on whatever the loan agreement is that gets signed. All the conversation and all the spaces and all the web pages and everything else are really to help flesh out the nuance and the details and to get clarity. But at the end of the day, you're not accountable to anything, and we're not promising anything that isn't verifiable on a signed agreement. And that agreement would be the loan documents, and it will state everything. If you don't have an account with SALT, we wouldn't be able to talk in those kind of details until you have one. And then as soon as you do have one, then you just fill out a loan application. In your example, the loan application would be for $100,000 if that was the amount that you needed to pay off. That would be the principal amount you need. And we'll get clarity on what the final distribution amount is of the collateral coming from Celsius. Normally, you would just make a deposit from your collateral and off we go. The only reason there's a coordinating closing in this situation is because we have a third party, which is Celsius, we have to coordinate with. But all the finer details will come out in that agreement. And there's sometimes subject to different jurisdictions or timing. And so we won't quote you exacts there. We would want to get you something that you could look at on paper to confirm it. But happy to talk more generally about it if that didn't answer the question.
It's a very good start. Where is this application?
saltlending.com. If you go through, I think our preferred method, correct me if I'm wrong, guys, there's a landing page for Celsius specific. I'm assuming that you have a creditor claim at Celsius just for the way that you've framed the questions. If normally you just go to create an account, log in, or sign up at the top of saltlending.com. In this case, there's a Celsius page that will help speed up the process that tracks you to make sure that we're talking to somebody who's going to need that additional help in coordinating. And as soon as you're there, we have communication channels. You can go back and forth with us at any point in time through loan support. And once you sign up, you'll just see a loan application and it looks like a calculator and a process for you to determine what it is you're looking for. That will kick off emails and documentation to you. And then from there, we just go until it's final.
Yeah, that's right, Shawn. And hi, Lawrence. The landing page is saltlending.com/Celsius-refinance-solution. And I also put that in the comments of the space, so you can click the link there if you'd like.
I posted it up in the nest too.
That's great. Thank
So
you,
you
Tony.
can
Thank you.
Lawrence, thank you for your question. We will make one final call for any last questions. We're a little bit over, but we appreciate everybody's participation. Appreciate the questions. And Tony, thanks again for coming up and sharing your sort of expertise and knowledge of the situation with everybody. Shawn, before we close it, any sort of last thoughts?
Hunter, we do have a gentleman, Coach Chad, just asked to speak
Yep.
as well.
Oh, that'd be
Yeah.
great.
Hey, let's take that. We'll take a couple. I've got time to take a couple more. Coach, jump in. We'll answer your questions the best we can.
Hey, thanks a lot. Appreciate it, man. Very good information. I'm just a little confused on it. It's not a tax situation. I do have a loan out with Celsius, and I just wanted to make sure that is the value for sure being derived from the petition date, because I've seen different things about this. Aaron Bennett on YouTube, Tiffany on YouTube. So I just want to make sure I'm not, I looked through the Strato case, the documents, but I just want to make sure that is for sure that all the value that we are going to be receiving back from that petition date, because there's a November date involved as well. And if I am way off, please let me know, but that's my question.
I can say with 100,000% certainty, they will not give you more than the bankruptcy court tells them is the minimum amount they have to give you. And that's just based off of the claim that is unfortunately based off of the price at the date of bankruptcy. So it doesn't matter if Bitcoin is 50K, 100K, or 500 million. The claims will be valued as of the $19,881, which is what Bitcoin was valued at the date of bankruptcy.
Okay, excellent. Because I was looking at the claims being dollarized. Is that correct at that time?
Yeah, so once they went into bankruptcy, they no longer owed us any assets. They just owed us a dollar amount.
So they owed us a dollar amount, but they didn't. Did they end up selling our property at that time?
No, it's not our property. They own it. That's the problem.
So they got to dollarize it, but they still keep the property and the gains.
Yep.
That doesn't sound correct. That doesn't sound right. I mean, wow.
Yeah, believe me, I know.
That's brutal.
Yeah, welcome to bankruptcy, unfortunately.
Yeah. How does that work? Can a fiduciary per se choose to distribute the assets in kind?
There is going to be a liquid crypto distribution. That's what they call in kind. It's just not the identical assets that everybody had, because a lot of people had a lot of assets that cannot be distributed per the rules that have been created there, and the majority is all coming back out in Bitcoin or Ether.
But digital assets are way different than fiat. So
correct, and every bankruptcy is different as well, because the assets in every bankruptcy are going to be different. They dollarize it to start, so they have a snapshot, and then you deliberate and through all the motions and all the disputes until you resolve it. And in this case, the good news is, I would say that there is actually a liquid crypto distribution. People are going to get their coins back. The worst case would have been they just dollarized everybody and there was no option. But that's just looking at the other sunny side of it.
Okay. All right.
So the type of asset doesn't really matter, right? We could have shoe boxes as our claims. Instead of Bitcoin, I have 10 shoe boxes with Celsius. Once they went into bankruptcy, they just owed us whatever the value of those shoe boxes was at the date of bankruptcy. And if the value of the shoe boxes goes up, then they can pay us back in cash. And if the value goes down, then they can still pay us back in cash, whatever they have. They're electing to pay us back in crypto, so that helps people with taxes a little bit, but they could have just as easily just given us back cash.
So they get the profit, not the profit, I guess the profits, but they get to enjoy the of Bitcoin doubling since then, of Ethereum tripling since then,
Well, they don't.
so on and so on. I'm not understanding how that is.
Well, they don't.
Okay.
They're not enjoying anything. There's a fixed amount there, so the percentage that they're paying us back goes up and down based on the value of that, but the percentage is just the dollar amount. So whether you receive 50% or you receive 80%, if you're entitled to 1 Bitcoin, you're just going to get back 1 Bitcoin. There's such a big hole that it really doesn't matter, I think, how high the prices go. We're still just going to get the same amount of coins.
So you were, and sorry if I'm taking up too much time, but this is important to me, and I'm sure other people as well, about a percentage of that petition date value. It was around 68, including the mining company.
No, the 68 is just off the liquid crypto distributions. So if you look on the stage, Nati here, if you click on his profile, he has a link. I think he still has it, where he created like a breakdown of what we can expect. Again, it's rough math. We don't have all the info. It's just the best that we can come up with. If you go off of that, it'll break it down a little bit more. It's a little complicated, but you got to read through it.
Sure. Okay. Hey, thanks a lot, man. Very helpful. Appreciate it.
Thanks for coming up and asking your question. I want to address, while we're waiting on any other questions, I want to address one that came up in the chat from Lincoln. His question was, I have 4 loans all in BTC, and I understand that these can be consolidated. Is that correct? Lincoln, yes, that is correct. If you want to consolidate all of those under a refinance loan with SALT, we can help accommodate that. So we would, as part of the process, if you submit, go through the landing page and submit a form, you can provide that information, but we do offer the opportunity to consolidate all of those into a single loan. And also, just a note for everybody, I don't think we've mentioned it today, but as something that also helps provide some flexibility, if you do refinance or take out a loan with SALT, you can use multiple types of collateral within your collateral pool to be able to maintain your desired LTV, to provide some flexibility there. Shawn, anything you want to add on that, or we'll also make another call for questions. Happy to stay on as long as people are getting value out of this and have questions. I know that we will continue to do these on Thursdays as we go through January and work our way up to the Celsius resolution. And then SALT, we will continue these ongoing, just shift the topics and continue to talk about those things that are impacting all of us and important to you. Jackie, thank you for coming up. Please ask your question.
Hi, can you give any more insight to California residents?
Yeah, we mentioned this earlier today, but where we're at with California is we're resolving the matter as quickly as possible, and we think that we are basically about to be resolved, and we're anticipating and planning on being able to service California shortly.
Okay, I know that's the answer I've been getting for months now, and I'm getting a little concerned at knowing how the state is.
It's changed. Yeah, it's changed a lot though. Just so before we were basically just saying, "Hey, I'm sorry, we're moving as quick as we can," but these guys are just not helping the California residents out. That has changed in the last 2 weeks. We've had an extensive amount of communication back and forth, and have been informed of where we're at, which would give me the confidence to say that we plan to be servicing in California. We have a large amount of customers already there, and so we'll be prioritizing them first. But we're also planning on making sure that the Celsius creditors don't get left out or harmed in any way, because if they have the need to refinance, it's really important that they have that ability to do such, and they shouldn't be restricted based on something like that. So we've been putting a lot of energy on it. I'm sorry if it sounds like the never-ending thing. Trust me, it's been the most annoying process for us that you could possibly imagine. But I actually think we're about ready to wrap it up.
Okay, so I filled out the request. I followed the Celsius link. I filled out a request, and it leaves me in an area of somebody will get in contact with you. Is that where we're at right now? I'm just in queue waiting to hear back, or somebody will contact me after you get some resolution with the state?
Yeah, so with California specifically, we didn't send out all of the documents because we wanted to just get a little more clarity, but we will be sending everything out to everybody. We just have been prioritizing people that have already had SALT accounts with us at the front of that. So expect to hear communication soon. I know soon's a hard thing to define, but we're pushing on it as fast as we can to make sure that everybody's got time to review their documents ahead of schedule.
And what you're asking the state is to just allow us for this one instance because we were with Celsius, or is this going to be wide open to all California residents?
Yeah, we're working to be reinstated with all California residents. We want to be able to service and originate and maintain growth in California across the board, not in some limited capacity.
Okay. All right. I guess I'll just keep waiting, and hopefully we'll hear something soon. Thank you.
Yeah, I feel your pain. Trust me. I'm sorry it's taken forever.
Jackie, thank you for your question and for coming up. Shawn, we have another question in the chat. I'll let you lead off with this, but continuing with the jurisdiction theme, the question is regarding the differences with UK and France for loans. And do you want to, would love to have you share our perspective and what we can do for UK and France, but also international loans in general.
So we basically take interest in from the entire planet. There are certain jurisdictions that are what I would call on the bad list, not because we put them there, but because they have other issues going on where they'd be on a sanction list or something like that, that we typically don't prioritize. When you look at the total amount coming in, we have all the different states and then all the different countries, and it's a surprisingly large list. So we constantly have people being confused with the difference between where we have licenses and where we can lend. There's a lot more places that we can lend that don't have any type of lending laws specific to this, but we're very cautious to always prioritize getting a license if and when we identify one, because that's the appropriate way for us to make sure that we are interacting with the state without putting anybody at risk or having anybody say that we're not following the rules. So then we measure the matrix of demand. Let's say there's $5 billion worth of people out there, and some of them are fake, and some of them don't know what they're talking about, and some of them are trying to get a student loan and don't know what crypto is. There's a lot of filtration that happens in order to get down to people who have crypto, can make a deposit, and are in a jurisdiction that we can lend to where we're comfortable. And that comfort comes from either having licenses or clarity that there's no licenses needed. A lot of times there's safe harbors and different provisions that are just slightly different. So it becomes way more complicated than you'd imagine, just based off of a whole bunch of humans all over the planet making different sets of rules. In the event that you haven't heard directly from us or it's not clear, the best idea or the best option is just to communicate. We just start a communication, typically through email, but any channel is fine. In order to get started, we'll take a look at the account. We'll make sure we understand where you're at and what the concerns are, and we'll prioritize it. Like, to get into the conversation about what's the difference between the UK and France, well, there's a lot of differences there. We've done business more so in one place than the other. And there's a long list of places that we're now expanding to. Some of them, none yet, have been as complicated as California. Those guys take the cake. More than New York, more than anything. More complicated than the bit license, you name it. But a lot of states are simpler and a lot of countries are simpler. We just have to prioritize them. And that comes from the borrowers. So the more noisy we get people that need our service, we're gonna focus on prioritizing them first, just because we do have limited bandwidth and we can't solve all things globally all at once. So the best thing I would advise is get a conversation with us where we can really look at your specifics, where right now we typically talk a little more general, and we'll hammer through it until we get a resolve. It's also much easier when people come to us versus us marketing, if that makes sense. Like, we're not necessarily putting targeted marketing out in France at all. If somebody comes to us from France, it's way easy for us to prioritize it comparatively to trying to go get a local presence, if you will.
Yeah, and Shawn, just to add to that, if you can go or want to go to saltlending.com, we have a ineligible jurisdictions list on our site, which covers off all the areas that we cannot lend. And if the country is not listed there, then please submit a loan request and we will actively work with you through the underwriting process.
And to be clear, some of those places like North Korea and California that are on that list, we'll still talk to you. We're still working through it. It's just you have to deal with the North Korean government or the California government.
Pretty much the same government.
Pretty close.
All right, Shawn, one thing that I want to make sure we remind everybody of before we close out or we address any other questions, we touched on it a little bit earlier, was the lending investment opportunity. If you want to learn more about that, please go to saltlending.com/earn. And provide you more information, provide you the opportunity to go through the accredited investor process that Shawn had outlined earlier. And then after that, a member of the team will reach out and we'll be happy to assist you.
Yeah, and my only comment on that page is whether you are or are not an accredited investor, that's just up to you to attest, and that's an honesty check of people saying what they are. It's not to deter people who are not, because many places in the world don't have accreditation check rules. It's just another filter for us to know where people are at and how to talk to them and what paperwork to send them through the process. So if you're interested, and I don't want that to be a gate or a blocker, it's just more of the formality of us checking the box to make sure we always do everything proper.
Open Space, thanks for coming up. Please ask your question.
Hi, I wanted to check about Hawaii. I opened an account and I signed the loan document, but just wanted to see, since Hawaii is still listed like one of the places that you're not able to loan, just wanted to see if the fact that I signed the loan document and I opened an account, is that enough? Is that confirmed, or you're still checking about it? Thanks.
Yeah, that's enough. And thank you for doing that. From here, it's just going to be conversations until we confirm final details.
Okay. Thank you very much. Thank you.
Final calls. Anybody else have anything else? Questions that we have not answered yet? We do have open channels all the time. It's never a burden to get those questions coming in. A lot of times it's just a matter of aggregating and making sure that everybody's got them. There's a frequently answered page. We have a chat assisted AI agent that we've been building to answer all these questions. We have loan support, we have phones, we have Twitter. The more we can get it towards your actual account that's associated with the email that you have an account, usually speeds things up. But any and all questions are welcome at any point in time. It'll help make sure that we're not leaving you hanging on anything, that you're well serviced. With that being said, is there anybody else has anything else wants to discuss or any open questions before we start to wrap it up?
And I'll just remind everybody, if you do have any specific questions around loans or would like some assistance, please email at sales@saltlending.com, and a member of the team will respond to you and help you out with any of the questions or topics that you're interested in.
Can I ask a question about BlockFi?
Well, let's do it. Yes.
I had been DMing with Justin, and he said he was going to be talking with the team, and there was a specific day. He said, "Well, we're going to talk about this today," and we started talking later. And then he said he was on holiday, and he never got back to me as far as what that answer was. And I'm thinking, and there isn't the channels as there are with Celsius as there was with BlockFi, and it's a lot more quiet, not as much people chatting. But I think what happened with BlockFi is they gave us a date until the 28th to pay off our loan, to send a wire, but I don't believe they were releasing any collateral at that time. It was, I think, pay and then get it later when the distributions are finalized. Did you guys ever talk about that or have any insight?
Yeah, first of all, I have to just say, since Justin's lost his voice today and can't defend himself, that guy's a slacker. I'm sorry he let you down. But all jokes aside, the BlockFi situation was that we looked at that earlier on, and it was not very clear, number one. Number two, they don't have a community per se like Celsius did. There was no spaces. There's no information. I reached out and spoke to the previous CEO and a couple of people that were related there that had access to the board and were involved. Spoke to an investment banker and wanted to get some intel into if there was anybody we could help. And it just never really materialized. I think we are open to doing refinances at any point in time with anybody, including Coinbase, Let-In, any of these guys you want to get away from or need to get away from. That's like a normal process for us. The ones that are more challenging are when they're in bankruptcy. If you have direct information that has changed, the key question would simply be, are they going to honor said buddy collateral back? If it's without that, it becomes very difficult for us to even assess. And I just couldn't get a straight answer on that. So I told Justin and the others, I said, we can't really prioritize that. Let's just stick with taking care of Celsius where we know we can add value. If we could get a little clarity and we knew that if loan payments were made to BlockFi in any way and collateral come back, we would jump on that immediately. We had looked at the same thing with Voyager, and then that just devolved very quickly into not being something that anybody could help with. So we would definitely look at this again if that would help you out.
Yeah, I've felt the same way. Just it wasn't clear what they were doing, what we would get back, and DMing back and forth with Justin. I started to realize that there wasn't anything coming back immediately. What they were saying, was they would send Bitcoin, but I don't know. It's no community. And the digging around I did was the deadline was they gave us a couple weeks and said send a wire to this wire.
This is free.
These
this is
wire
recent
instructions. Yeah, this was. I think I got notified maybe in early December, and then they said, yeah, you have until the 28th, and that was it. I had opted in, and yeah, they barely gave us less than a month to send in the wire, and I originally thought it wasn't worth it, but I thought, okay, since I have Justin on DM, I might as well try it, the Hail Mary, but it just didn't work out. So I don't know if it's just over now or.
Well, if you have, so here's the limitation we have. We are limited in bandwidth. What we usually need more info on is source data. So if you had contact with somebody there and could forward either a contact person or the official information, it's possible there's something for us to do that we just haven't spent the time to look at. because we have so many questions every day to answer from our current customers and people who we know we're already engaged with. A lot of the times, all the nice to know ideas like that, they end up in an idea board, and we work through them when they resurface or when they become really important. But if you have a contact there, or you could send us that documentation, that could potentially change it, because we don't have that update that you have. I was not aware of that.
Yeah, I had sent all the communication that I had to Justin, but
Okay,
I
then
think
we'll
it's
get it.
over. I think it's too late now.
So yeah, let's figure that out. We'll figure out if it's over, there's no point in talking about it.
Yep.
If there's still something that can be done, we'll look at it.
Okay. All right. Thanks.
Yeah. Thank you. Appreciate that.
I have a little bit of info on the BlockFi thing. I'm not involved really that much there. I just know, just because I follow it, just to see what's going to happen in Celsius. Problem with BlockFi is that the excess collateral portion of it is stuck on the FTX bankruptcy. So basically, if you refinance, for example, through SALT, whatever your principal amount is, they'll get that amount back in crypto. But the excess collateral part of it is to determined with the FTX bankruptcy. So you would basically start out your loan. You would start out your loan with 100% LTV.
Right.
So my solution to that, and I had mentioned to Justin, was, I have additional Bitcoin. Can I send more collateral? And I just never heard back. That's how I thought I would solve that problem.
Jackie, I'll apologize. It's possible that I just told Justin not to prioritize that. Why don't you we'll note this and send us that, or I'll sync with Justin right after this, and we'll make sure it's nothing that we're missing that we could do. And it is just possible that it didn't rank as what made sense at that point in time. We had originally looked at the same kind of configuration with Celsius, where there was no clarity, and I was putting together a program like a year ago to whatever, how many it's been, when it was not clear what the collateral would be. I said, we'll just create a new product that basically does what you said and locks in an unknown value on the collateral, and we accommodate for that. So there's ways to do this. They all take energy. And if it was just one loan, it may or may not be worth it. If it's more than that, it will move up the needle. But I apologize if we didn't get back to you. It's probably on me. And we'll jump on it today and at least assess it.
Okay. Yeah. And the time given was nothing either. So that's why I just said, forget it, and started just dealing with him at the end, because there was no clarity or anything. So hopefully you guys, though, come through for me on the California side of Celsius, because I was in both.
We have anyone else pending? Anybody else have a comment, question, concern we can help out with?
There's no one else waiting.
Okay, we'll small talk for a second, and then we'll probably wrap it up. If anything comes to mind, please jump up and just jump into the conversation. Otherwise, it's been a pleasure. There's probably some new people joining. This will be a recorded space. Our channels are always open. This has been predominantly focused on answering questions related to the upcoming Celsius closure. And we are now in, it looks like we have one hand up. Go for it.
Hey, Shawn, it's Imran. How are you?
Good.
Hey, man,
How
I'm
are
doing
you?
well. I'll make it real quick. I just got into the space, just a little bit busy. But did you guys ever? I know priority was being given to people with current loans. Was there any discussion of any potential solutions for liquidated loans or any potential programs?
Yes. So this is one that was a much bigger opportunity potentially, or I felt much worse about than, say, BlockFi, where we had spent a lot of time on this. The challenge with it is that it's a new product, meaning it's a different situation altogether. And the other challenge with it is that Celsius didn't ever come up with any kind of solution for that group. And so it's a little different of a topic. But in essence, the idea was that the thing that we could provide would be along the lines of a new structure, earnout. So if you went back in time, some of the originally negotiated products that the borrower committee came up with, I should say the borrower ad hoc, and they were along the same lines of what we were thinking was, okay, give us 100% of our collateral back and we'll just lock up in a loan process for 5 years or 4 years or 6 years, depending on what it would take. And that's an economic model that you can build, and you can prove that over a certain period of time in those conditions that you'd be able to get back the collateral with a certain rate of interest and a certain amount of new collateral. And so we looked at it and said, wow, that's actually interesting, because that's very much like our stabilization product, which is, you could think about it like insurance that says, hey, there's a way for people who are out and about and don't have the option in any kind of liquidation event to just immediately stop what they're doing and make a collateral call. This creates flexibility for that to happen over time, where you still have to make additional collateral deposited to a collateral call when you have a margin call, but you have a lot more time in order to do that. And so you have a stabilization instead of a liquidation, and you don't put the loan in default, where a lot of the platforms, they just immediately liquidate you and default you and it's over. So we said, okay, that's similar to what happened with these liquidated loans. We need new collateral to come up to a certain portion, but then we'll give credit in the form of either equity or an IOU or an obligation that's baked into the loan terms. I'd still love to do that, and it's not dependent on the bankruptcy process being completed. It's more of a different product altogether. And so we said, we can't do a lot of things all at once. Let's just make sure we can do the current payoffs of obligations and do it excellent now. And as soon as we get that done, we can look at what's the biggest next priority. And at that point in time, it was around $300 million of liquidated loans, which is a significant number. And so it makes sense that could come back around and still be very valuable for us to talk about. We just wanted to get through this first, number one, and then reassess and see how many people in that category could still be helped, and come back around round two to see if there's more value to be added, where we know we could do an excellent job with it. And we'd have to kind of restructure and think through what's the best optimal scenario where it might or might not work. Now, again, a lot of things have changed in the market and across the board. And so I just have been hesitant to want to put too much out about that or overpromise, because I don't want to get anybody's hopes up unless we knew we could actually make it happen. But I will give you my word that as soon as we get these refinances done, when Celsius is closed, we would open that conversation up, and I'd be happy to look at it with you and the whole group. And we can really figure out if there is or isn't something we could do to help make good on that in fairly short order. We just have to punt on it, unfortunately, until we get through this process.
No, I completely understand. I just wanted to make sure I didn't miss anything, so I appreciate it, and thanks for going over it in detail.
Yeah, you bet. I can't wait to talk about it in more detail when we can.
OXD, thanks for coming up. I'd love to have you ask your question.
Hello, guys. First of all, I want to wish you a happy new year to you all, guys, because you've been through a very heavy and hardcore nightmare this last practically 1 year and a half already, going for 2. I hope so. No, guys, I'm just a little bit curious about if you guys had any kind of discussion or any kind of talk with the Celsius employees or the Celsius directors, or the ones that you have to talk to, know if they already give you any deadline. It could be possible that there is a deadline already, maybe 25 January or first days of February or something like that. Do you think, do you have this info or something?
Unfortunately, we don't have a specific date. We have been given guidance that the effective date is likely to be towards the end of January, but that is all the direction that we have been given so far. We are in conversation with the debtor, and as soon as we have more definitive information, we'll be sure to share it.
Okay.
Yeah, we've basically been told that the UC and Kirkland should be sending out notifications officially by the end of this week. So let's just say within a week, maybe if there's some delays. But that notification should be coming soon.
So the process merely should be like they're gonna send the collateral to you guys. You're gonna,
For people who participate, yes.
yeah, and as soon. So I think we're gonna have some kind of a previous time or some kind of advice that Celsius is gonna send us an email. They're gonna say we are preparing to do the distribution, blah blah blah. They're gonna send it to you directly, and
they're gonna send that to you. Everybody that has a claim with Celsius should be
they're
getting
gonna send it to
more
Coinbase.
communication. No, sorry. They're going to send it to the creditor. The notification is going to go out. The collateral will be sent to us.
Yeah.
We'll confirm that. That's my apology. The email and communications are going to go out to all creditors. I think they're going to make everybody state that they are or are not paying off their loan ahead of time.
Yeah.
So they can plan properly, which is the main thing. We need to be able to plan specific dates to coordinate with them so everything is safe.
Okay.
And then we're not involved with Coinbase at all. So these will just go directly. We will send money to them. They will send your collateral to us, and we'll have the proof of both sides locked down in the documentation.
Okay, and after it, I suppose it will be reflected on the SALT account, and
That's right.
we're gonna be able to see it.
That's right. Yeah, you'll have a loan. What we would consider a loan payoff statement. So in typical format, one obligation is closed, and you have a record of it.
Yeah.
And we would then have a new origination of loan documents that are new, and those would correlate to the same time. So one is paid off, the other is originated, and the documentation would match across the two.
Okay, wonderful. Looking forward to it. I think I don't know. I did some work around or some maths with Justin to try to figure out how much I will be getting in return from Celsius, because I had there like a 1.8 Bitcoin. So I'm almost 2 Bitcoin, but it's 1.8. And I suppose that would be something like a merely almost 1 Bitcoin I'm gonna get back, or I'm totally wrong.
There was a little bit of noise. I didn't quite hear that, but there's a slight increase in the number that comes back in a calculus. We have a calculation that has been we've created, and one that the community's created it. We've put up in the nest, I believe, and or we can send out to anybody who's looking at it. And you basically put your own inputs in, and it should give you a good estimate. And now, of course, there are still assumptions until they actually finalize the effective date and finalize the liquid crypto distribution amount. But I think you can get pretty close using the haircut number that everybody's been circulating. I think it's going to get really close to that.
Yeah. Okay. Great. Thank you so much. I'm just looking forward to everybody to get the collateral, and that these really bad times end over for everybody. And
yeah, let's make 2024 be a better year than the previous. We appreciate you.
Yeah, man. I hope Jesus listens to you. I really hope so.
Hear, hear. Thank you for your questions.
Yeah, you too.
GL, thank you for coming up. Please ask your question.
Oh, just real quick. Thanks, everyone. I know you guys mentioned no one has clarity when the effective date is, but is the 2 week before the effective date situation still in motion where they freeze everything based on the value? It's 15 days before the effective date?
We've heard multiple things, so I'll be careful not to confuse anybody. We know that the hope was that they would give borrowers up until 5 days from the effective date to confirm if they would or would not pay off their loan. And so this is specific to borrowers, for anybody listening, that are looking to pay off their loan or looking to potentially pay off their loan. And the loan will be paid off either way from Celsius. It's either going to be paid off in a liquidation event that they would call an offset, or it'll be paid off from you, or it'll be paid off from a refinancer, like a loan like us. And the locking in of the price has less impact than for a lot of people, because ultimately there was the dollarized claim amount, and now what everybody's waiting for is just to know, based off the percentages, what is the final liquid distribution amount, i.e. the total of all the claims divided by, split up by who's owed what part. The difference comes in with people that are paying off their loan, that there's an additional step. I think it's actually simpler in all reality, but there's an additional step because of the refinancing. And then there's the amount that gets added in back to your crypto distribution amount. And there's a slight delta or a slight difference between what those two look like that I think most would argue comes out in a little bit more of a favor for a person that pays off the loan. But that's subject to opinion, and really everybody's got to make up their own mind as far as what that looks like.
So was that, I know a long time ago, people used to talk about 15 days before the effective date, and no one's brought it up again. So I was just curious where we're at with that. But
yeah, it's a good question. We got ourselves confused earlier today because there was conversation around a 30-day marker, and I have just been simplifying it, saying at the end of the day, there's the things you can control and there's the things you cannot control. As soon as they give us the effective date, as soon as they send out the notification, and as soon as we know the final liquid distribution amount, then everybody will have all of the information. I don't think it swings things too far one way or the other. From the estimates I've seen right now, everybody that wants to can get a pretty good handle on what their amount's going to look like. And for us, it's just a matter of we're going to start coordinating those closings. So we'll be helping close out the retail borrower obligations that get paid off for anybody that goes through SALT. And we're doing it in a sequential order. So it matters for us to get the loan documents processed and put in front of you and gotten in place sequentially, so that when we start scheduling those dates, we can do them in tranches and move as fast as possible just to get people closure. And we're still anticipating that's best case the end of this month or the latter half of this month, but it could stretch out into the next month. I don't think it's going to stretch any further than that. I don't think the effective date is going to get too further delayed either, but you never know. You always have to be prepared for just what if the long tail stretches out a little bit.
Do you know what they're waiting for to give the effective date?
Calculus. I think it has to do with just probably a lot of paperwork and to-do list stuff that people have to finalize in order for them to feel confident that they can ship official notifications out to everybody. That's what it appears to be for me.
Okay, got it. Thanks so much. Good to hear from you.
Yeah, you bet. Thank you for being here. I don't know if I gave the most coherent answer there, so if anybody else wants to add to that, feel free.
Hey, Tony, thanks for coming back up. Do you have anything to add or a question?
Oh no, sorry, I got stuck on a call before I dropped out. I wasn't sure if anyone had another question, but the 14 days is when they lock in the percentage distributions and prices of everything, and the 30 days that's floating around. Whenever they send this notice to borrowers, they're supposed to send us something where each borrower has to decide if they want to set off, pay the loan, or refinance. They're supposed to give us 30 days to do that. Why they haven't sent it yet, I don't really know, but I'm pretty sure the effective date can't happen unless that 30 days happens.
Do you mind mentioning a little more on this 30 days, Tony? Because this is what kind of got us spun up earlier, and I wasn't going to bring it up, but since it's being discussed, will you go a little further on what your understanding of that 30-day marker is?
So in the actual plan, it says that borrowers will receive some type of communication where they will notify the debtor of what they want to do with their loans. According to the plan, it says we have 30 days to decide. They still haven't sent that out. So I'm not really sure what they're doing with it. We can't get a clear answer. I don't really know outside of that.
I'm gonna look into that today, because that one does seem contradictory to what we've been told, and I'll just explain real quickly why. It sounds to me like because what we were hearing is that there would be an official notification that went out, and that they would have everybody would have to tell the debtor if they were or were not going to pay off their loan obligation within 5 days of the effective date. But what you're stating would say that there would need to be 30 days for everybody to make up their mind, rather than just acknowledge that they had already been aware. That would add an entirely new dimension to this. That would be a delay for sure. So I'm going to push on seeing if I can get clarity from Celsius directly, and if anybody else gets any more information on that, please share it with us, because that's definitely different than what we've been told.
Yeah, that's one of the problems. The document says we have 30 days to decide, but then we have 5 days to actually pay it off if that's what we choose to do. But there really isn't any clear distinction on timelines for those. And they've been saying it in court, the last couple of court hearings, that they will send out a notice to borrowers. And here we are, like 2 months later, still no notice. I don't really know. Can't get a clear answer on it.
Understood. Yeah, I think I'd heard that was the document itself was basically stating that everybody had the option for the advanced retail of payoff amount to be paid off, but that they just wanted to put a second piece of clarity in front of that for planning purposes, that they would get everybody to acknowledge that they were or were not going to, like which direction they were going to go, basically for the 5 days beforehand, so they could have those 5 days to process before they started doing any loan payoffs. That was the way we had understood it. is that the 30 days had already started, or whatever notice had already started for them, letting everybody know they would have the option. So that should be pretty easy to clear up. Let me see if we can clear it up, because it's really just a matter of if it's 30 days from when they clarified that there would be the ability to pay off the loan obligation with a refinance amount or with personal money, versus the 5-day countdown just being of acknowledgement that people are going to pay off the amount or let it net off. It seems to be at the discrepancy.
Shawn, I think we have gone through all the questions. We're probably at a pretty good spot. It's been a great session, gone for nearly 2 hours. Before we wrap it, anything you want to add?
No, appreciate it. We'll tweet out to this thread if we get an answer to that. Otherwise, we have open channels that we're communicating with people about specifically, and we'll see if we can get some clarity to the one question we didn't get answered. And other than that, if any other questions come up from anybody that you feel should be answered, please reach out to us, and we'll look forward to talking again.
Yeah, thank you everybody for your time, and everybody that came up and asked a question. The participation was great, and we really value and appreciate your support and engagement in the community. And we'll be back next week at the same time on Thursday. And until then, stay long, stay liquid, stay salty. Thanks, everybody.